Morning, everybody. Yes, change of pace. I have a chart on to start the live stream. Why? Because yesterday I told everybody I thought we were going to see 395 today. What do we see in pre-market? 395 on the SPY. Do I think it's over? No. I do think 393 is coming. And if things get ugly, then we'll see 389 on the SPY. Understand, for things to get ugly, the 2-year, the 10-year, and the US dollar all have to go up. The US dollar spiked a little this morning, came down. Rates spiked a little. They're hovering right where they are now, up 4 or 5 basis points from yesterday. That's not enough to tank the market the way I want the market tanked. Okay, I will talk about the SPY, and I will point out and use this chart. I just wanted to give you guys a little foreshadowing of what's to come and how I'm going to help you. Oh, real quick, I was listening to a live stream on Twitter yesterday. I forget what they call Spaces. And somebody says, hey, is this other Discord? And they were talking about something trading, bull trading, bullseye trading. Is that a good Discord? And the answer was very important. The answer to the question was, if they're just giving you entry points, hey, buy this now, hey, sell this now, then no, it's not a good Discord. You need to be able to figure this out for yourself, which is a reason I'm here, a reason we created SOC Discord, to teach you how to trade, to teach you how to fish. I mean, that's an old saying, we'll teach you how to fish instead of giving you fish. But that's the thing. If someone's telling you yes, no, buy, sell, then you're not learning shit. And even though your finances might improve the slightest bit, if you're not learning how to trade, then you're screwing yourself, and you're going to hurt yourself when you have that 1 or 2 or 3 off weeks. Your account will be done and you'll be done with trading. So please make sure you're part of a Discord that teaches you how to trade, so that you understand the techniques and the theories behind trading. Now, with that said, I wanted to get into a couple of different things. Oh, most important, you must have a cash account. Why? In this crazy market where you see these swings, SPY 410, SPY 399, same day. Let's just see if we can see what yesterday's range was on the SPY. Yesterday's range, 405. 396, a 9-point range, which is like 2.5%. You cannot get into a trade and hold the trade all day because you're like, I got great entry. But remember, you have the time decay. So the rest of the day. So the fact that it goes like this and you're like, okay, I'm 50% profitable, I'm 20% lost, 50, it's terrible. Cash account is key. Key things. Okay, another helpful tip. We'll start with tips this morning. Helpful tip with how I trade. Now, one of the reasons I used to like Robinhood is because I could transfer money up to $50,000 in a day. So I would start my account and I would trade with like $1,000. And when that position was down 30%, I'm like, okay, let me put another 1,000 in and I'll buy 5 times the contract. Okay, let me put another 2,000 in. And by the time I levered my account, I got the best average. So even though I might have been in at $70 a contract, when it was down at 31, my average was like 34. When it went back up to 70, instead of breaking even, I'm claiming like 78% profit. So that's a tip that you could use. You don't have to use Robinhood. Just tell yourself you have $1,000 in your account. You're only going to use $60 for the first 2 hours of the day. So you enter a trade. Now you're watching your trade. Your trade is down 40%. You decide based on your strategy, you still like the trade. So then you say, okay, I'm going to use my second allotment of $60, my third allotment of $60. You're going to go in $200, $240. By that time, you're going to bring your cost average so far down that when you are correct and you just get that little pop, you get out into your profit. I could use myself as an example. I was in some Facebook puts. I bought one contract at $36. It went down. I bought more at 26. I bought more at 22. It went down to 16. I bought more at 18. When it popped back up to $39 yesterday, I sold. I exited out. That was it. So my original entry was right in that range. Maybe I would have been up like 6%, but instead I made 58% on the trade. So please trade smart. Okay, cash account, enter small, scale out. Okay, so what to talk about today? Interest rates are at the highest level in 15 years. Holy shit. And then I hear some professor at NYU speaking on CNBC, and he said nobody's talking about it, but the Fed basically has to start reducing rates in the second half of next year. Well, that's great. We are day traders. We're focused on the here and now. He's trying to give me bullish hope next year that rates are going down. I don't give a shit. Let's talk about here and now. Things will get worse. What happened this morning? Bloomberg tweeted that the UK is technically in recession. Not a shock. The UK is not the United States. If our economy is like a 9 out of 10, or probably not even, it's probably like a 7 out of 10. Understand the UK is probably like a 5.5 or 6 out of 10 running their economy. China running their economy, terrible. You know what came out? November numbers for Chinese economy, they sucked ass. Why is that important? Because China lessened their COVID restrictions. Why? Because they knew their economy was struggling. So people that are saying China is going to pop, no. Please stay focused on the U.S. Please stay focused on trading. Okay, mistake that my friend made earlier in the week. Thought the market was going down. The SPY was at 410. He thought the SPY was going to 393. We interact heavily. What did he do? He bought SPY contracts that expired on like Tuesday or Wednesday. Lost a shitload of money. However, his strategy is going to be right. So again, please buy yourself enough time. Cash account. Enter trades safely, or like one at a time, two at a time, something like that. And then make sure you have enough time. Okay, what happened the other day? Now, I mentioned this yesterday. PPI on Friday, CPI on Tuesday. I mentioned we're likely to see pump and dump. Why? Because that sell-off that we saw early in the week wasn't profit taking. It was people actually selling into the market. So that's just not a one-day event. It's not like, okay, we all got it out of our system. We sold. Now we can start buying again. No, when you sell something, it's because you're looking to get a bigger discount. Oh, I'm going to sell Meta at 122 or 123 yesterday. Why? Because I think I could get back in at 109 or 108. And what is that going to save me if I'm a big institution and hedge fund? 14%. So these big institutions, hedge funds, big money, investment funds, they're only looking to make 10, 12, 14% a year. That's a great return. So they're not going to ride a stock down if they think things can get worse. All right. What else are we going to talk about? Oh, we're going to talk about key levels of the SPY. The Fed is not done. So what happened yesterday is the Fed is still as hawkish. They weren't as aggressive in their words, but they were very clear that they need to tame inflation. They were very clear that the game is not over. They have not succeeded yet. So what is that saying? It's saying that nothing's really changed. So all these bullshit pumps that we see, and yes, they upset me because they're so ridiculous. Like the one we saw, was it yesterday morning? And they were bringing it up, and then, or maybe it was 2 days ago. It upsets me because it confuses the retail trader. Now, I'm prepared for the pump, but unless you're doing your homework, you're watching me every day, you're part of our Discord, you follow me on Webull or Moomoo or Twitter or something like that, or you just don't have time because you're at work, then you're going to get fooled. You're like, oh, look, shit, the market's pumping again. Oh, the market's pumping again. But what is the market doing now? When the market was 400 on the SPY, I said 395 today. We're at 394 pre-market. So what am I actually looking for? Well, 393 is going to get hit. Why don't we just pull it up? Makes it so much easier. All right, so I'm pulling up trading ticks or trading view right here. I have the 4-hour chart, which gives us a number of days open, okay? So we're looking at the outflow when the market spiked up here to 410. No shit. Look at the volume yesterday. You think that's over? No. The last time we had volume like that, there was inflow followed by outflow, and the market went lower. We were 375, and we went to 370. So would it surprise me if we lose 5 points? Well, shit, we're already down 5 points. So let's talk about where support could be. Well, you see support right here, 322.22, 322.27. Why are those numbers important? Because that was Thursday's low of last week and Friday's low of last week. 393.23, 393.27. So understand, if we break that, okay, you're going to see support right at the 390 level. So if I was going to give my prediction today, as far as the downside goes, yeah, I think we're going to touch 390 today, which is crazy because I think we closed at 399 yesterday. Now, just because I say I think we're going to touch 390, please, you don't trade off of that. What do you trade off of? Well, you go back to that freaking chart that I've been showing you guys, and you use a 1-minute chart or a 3-minute chart to tell you when things are changing. Because if you're using a 3-minute chart and you can see the huge drop off yesterday and then volume increase, if your inputs you would have sold them right here at 397. You can't ride them all the way up to 400 or even 402 because you're getting crushed. If you're in puts and you see a huge sell-off and then you see a reversal, you don't want to be part of the reversal. You want to exit out. And then when the SPY goes back up to 402, what do? You re-enter the same position. Why could you have entered at 402 yesterday? I'll tell you, because I mentioned a number of times, 402.50 is rejection. So over here, it probably actually went as high as 403, 403.54. I would have been at 402.50 right about here. So if you enter at the rejection level, shit, you're making money because 402 back to 398, 397 and change. That's where you make your money. That's how you play options. Okay. So I'm going to talk about the levels. I'll start on top. Okay. You guys more than free to write this down. Plus, if you have any questions, please, on the side, I always say, if you want me to look at your stock, please, somebody asked me today, or yesterday, as the market was closing, is the market going to gap down? And I say, join me tomorrow morning at 8:30 on YouTube, and I'll answer that question. But the answer was yes, because I tweeted out to Discord, or I posted to Discord that I thought we were going down. So, okay, let's talk about the ranges. 410 on the top. That's where we saw it heavily reject. I showed you the 4-hour chart. Next, 406. We're not even there. Under 406, where we rejected twice yesterday. I just mentioned it. 402.50. What do these rejections mean? It means as it goes up and it doesn't break the barrier at 402.50, you know the market's going back down. I'm going to talk about Meta soon. Okay, under 402.50, next level down, 398. Why? Huge supply zone there dating back a week, 2 weeks. Why is that important? Because we're cracking that pre-market. We closed at 399.40, and we're going to open around the 395 level, maybe a little under. So let's talk about it. 395 on the SPY, major important level. So until you know whether that's going to be resistance or support, you can't really trade. If you wanted to guess and you said, Matt's a bear, that dude's a bear, that dude's a bear. Tesla, Elon Musk, been selling more stock. I think he collected 3 billion or 6 billion early in the week, sold a ton of stock. Tesla went down. Remember, I had my $170 puts that I paid $2.68 for. I sold them for $500. They're probably going to be worth about $1,600 today. So I made 100%, yet I left. I mean, the trade would have been what, 1,000%? No, 500%. Anyway, okay, so 398, 395. The next level down, which I just mentioned on the chart, and I will bring it up again. Okay, the next level down, where's the chart? There we go. Is going to be, what do I just say? 398. So right around here, which you found support. See the support level at 398? So again, 398, important level. Let's go to the 4-hour. Okay. 390, where we were is 395. 395 is right around here. As you can see, support at 395. When we break that level, okay, you guys are looking 395. Right, next level down, we can actually go to a 388 before we find support. So I'm not saying that's going to happen today, but in my opinion, if I'm zooming out of the market and you say to me, Matt, look at the next 5 trading days, what do you see happening? Do you see 388 on the SPY happening, or do we possibly hit 410 on the SPY again? Shit, I'm going to be in the ballpark of bear 388. Now, let me tell you why, okay? Because everything, we all know what the Fed was going to say. We all know 50 basis points. We all know February 1st, their next meeting, they're probably going to say 25 basis points. So what is really important is earnings. And earnings and forecasting suck right now. There's no ifs, ands, and buts. I made a video about it like 6 months ago on YouTube. I'll try and retweet it. But I was like, this is imminent. What's going to happen? And this was in June when everybody was raising their price targets. And I said, they're crazy. We're going to recession. Rates are going up. Money is more expensive. It's going to hurt earnings. And we're not going to see it for another 6 months. Well, that was in June I shot the video. So June for the video, 6 months later, December, boom, there you go. Earnings suck. Analysts are finally coming out. Now, the crazy thing or the manipulative thing is these analysts, they're probably smarter than me. Well, some of them. The point is they know earnings are going down. So as they're bumping up the price target back in June, Netflix 480, Netflix estimate 420. Bullshit. Netflix went down to 255 before it bottomed. They knew it was going down. So please, when you hear analysts, when you hear JP Morgan or somebody come out, Jamie Dimon, and say, yeah, the market's going to drop 20%. Think the opposite. When you hear them say, yes, we're having a Santa Claus rally, think the opposite. Let's all remember the anti-Jim Cramer ETF that was created. I mean, Jim Cramer, I tool on him all the time, but he's a smart dude. His timing is off. He means well. His timing is off. That's it. We all experience that. We're like, shit, what if I held longer? What if I bought out the next week? I'll give you one more timing scenario. I had a friend who used to short Tesla. This is when Tesla was running up every week, and he's like, this is ridiculous. He used to put $250,000 into weekly put options. He did it for 10 weeks straight. He lost $2.5 million. After he got rid of his strategy, the following week, he would have lost another $250,000. The following week, his $250,000 would have been worth $32 million. Okay, so he lost $2.5 million. If he continued his strategy 2 more weeks, so he would be in for $3 million, he would have made a killing, and that was his whole strategy. But he got so down on himself because he was like, I lost, I lose. If you lose 11 straight weeks on a strategy, shit, you're probably going to give it up, especially if you're down $2.5 million, which was a good chunk for this gentleman, the way his investment strategy is. Okay, so I mentioned the pump and dump. I mentioned the Fed is not over. I mentioned China's economic slowdown leading to the easing of COVID. All right, China's not done. The UK is technically in recession. The rest of Europe will likely follow. Let's keep in mind, we're entering the winter season, and oil and energy prices will likely go up. People will start losing their jobs, which will go down. Interest rates will continue to go up. That is not a good thing for the market. Now, that's zooming out. So I mentioned interest rates, highest the 15-year high. Discord. Oh yeah, I mentioned Discord just for everybody that wasn't here. So I was listening to Spaces yesterday, and somebody was newer to trading and was like, listen, is this a good Discord? He was talking about like Bullseye or some shit like that. And the person said, if they teach you how to trade, then yes. If they're just giving you alerts, then that is the worst Discord out there, because they're telling you to buy. So first off, you're trusting in someone that you don't really know. Second off, they're not teaching you shit. Third, if you're working a real job and you miss an alert and everybody else sold their position and you're like, shit, everybody sold, and that goes down, they're claiming 40% and you're claiming a loss of 50%. So please find a Discord like SOC, our Discord, that'll teach you how to trade, that will teach you what to look for and how to enter positions. So I mentioned no man's land. When the SPY trades between ranges, and again, I mentioned them again, 389, 393, 395, 398, 402.50. I can't trade the SPY. Now, when it rejects 402.50, I can get into puts. When it rejects 406, like 2 days ago, I can get into puts. If it goes up to 398 this morning, when it's at 394 pre-market, I can get into puts at 398 because I'm bearish. If it drops to 393 and then goes back to 395 and rejects 395, I can get into puts. Anytime in between those ranges, if you get involved, you're just screwing yourself. Okay, so let's get to questions today. I got one about Meta because I entered some extremely cheap Meta contracts. I mentioned this earlier. I was in 3 contracts at 36. I bought, I think, 5 more at 26. And I think I bought, I have a lot of them. I think I probably bought like 42 more at like $18 or $19. I think $18. I think it closed at, and I'm going to tell you what I think of Meta. I'm just sharing my position. Yeah, it closed at $12 each. Okay. So I'm bragging to you like, yeah, I bought at 18, 26. I'm a killer. It's at $12. End of day would have been the best entry for my position. End of day, I would have saved probably 100%. I'm probably in at $23 each. Yeah. So I'm down right now 50%. Why am I so happy? Because I will look at Meta pre-market and I will see the SPYs at 394.20. So that's a good thing. Meta's down over 2%. So we're sitting at 118.80. Understand, I entered into these contracts when it was 121. 121, it went up to 123. I'm like, shit, my contract just lost half its value. What's likely to happen this morning? I already have my sale order in for like $40-something per contract. So yeah, it would be 300% if you got in at $12. But I didn't get in at $12. I'm in at 22. So I'm just looking for a little under 100% return. Again, small accounts, the greatest thing. Imagine if I had bought all my contracts at $36 or $39. Shit, on the spike this morning, on the spike of those puts, I would be like breaking even. I would make maybe $3 a contract, it would be the worst thing in the world. I would be feeling terrible because if I was entered at 36 and it was down to 12 and I was down 66%, all in, jumping in with 2 feet, that's just the worst way to trade. Okay, so we got that one out. Tesla, I just mentioned. I think someone asked about Tesla. Yeah, so Tesla, I already mentioned this earlier in the week. Actually, exiting last week, I was in puts in Tesla. I actually thought it would drop down to like 158 or something like that. It was at 180 something when I entered into the contract, or 178. Now, here's the catch. I bought a contract that was a $155 put that expired this Friday. And I bought it for like 30 something cents. And I said at the time, do I think Tesla's going to 155? Hell no. Guess what? I think Tesla's at 154 this morning. That 30-cent contract was selling yesterday for $400. So $30 into 400. So again, when I mentioned my other Tesla contract that I was in at 268, sold at 500, will be worth somewhere close to $1,700 per contract today. Imagine the 30-cent contract is going to be worth $4.50. So yeah, next, please give a like. If you like watching me every morning, tell me. Give me a thumbs up or make a comment. I get comments on Webull and Moomoo, and people say, yeah, dude, I've been following you for a year. I love the shit you do in the morning. Tell me on YouTube. Why? Because the more comments on YouTube, the more thumbs up. They show it to other people. And I'm just trying to grow an audience. I'm trying to grow helpful. I'm trying to grow where I can help other people. That's it. Just help other people. I'm not here to pump. Oh, yeah, let's talk about the pumper. Zach Morris, Paddock, Tommy O, right? They all got arrested at their mega mansions. All right. I think one of them's in Houston. I think one of them, I just saw Paddock in Atlanta. Now, it's not funny, but they had a Discord of 250,000 people, and they would pump a stock. They would all get together and say, yo, I'm going to buy this at 10 a.m. this morning or whatever. They profited over $144 million. So the SEC brought charges. They are all under arrest. PJ Maddock or Madlock or whatever his name is, Zach Morris, and a couple other people. Here's the thing. The SEC does not bring any cases unless they're rock solid. So these dudes are screwed, even with the best lawyers, and they can afford them. They're going to be hefty, hefty fines, and there should be jail time. Now, they're not famous like Martha Stewart, who got house arrest for insider trading. These crimes are manipulation. It's a lot more serious. A lot more serious. So when they're talking about it, there's a right way to trade and a wrong way to trade. The wrong way to trade is they're doing the same thing institutions are doing. It's called a pump and dump. They would pump and then they would dump the shares. What do institutions do? They give you a price target. Hey, NEO should be 22. Why is NEO at $12? You know, shit like that. Hey, Plug should be 72. Why is Plug at $15? Anyway, I got a question here. I didn't read it yet, but let's see. Hi, good morning. Thank you for sharing investing. Inverse ETF would all right in this season. Yeah, you know what? ETFs are not a long play. So anybody that's involved with an ETF, understand exchange traded funds, they take an expense ratio each and every day. So whatever fund you're in, you're losing a small percent every day. So to sit in an ETF for an elongated period of time is not my vehicle of choice. What I would rather do, and you could play a longer term strategy on this, if you think the market's going down and you think we're going to see 380 on the SPY again, or 378 or 388 or something like that, buy out or buy heavily in the money. Give yourself a couple of weeks. You'll put in 2,000. If you're correct, you'll double your money. It's a safer play rather than just parking it. I know people that buy shares in UVXY, and I've been telling them the volatility index, but the futures volatility index. It's not like the VIX. The VIX will be up 9%. The UVXY will be down 2%. Well, shit, how did that happen? I thought the UVXY was 1.5 times the VIX. No. Future volatility, UVXY. Current volatility, VIX. So if the fear index goes up today, the VIX goes up. Does that mean the UVXY has to skyrocket? No. In fact, the UVXY, in my opinion, is heavily manipulated, and I haven't made a trade in the UVXY in probably over 6 months. And you know that was my ETF in choice. Every time it spiked, I would buy puts. We would all buy puts, make a shitload of money. Do we have anybody going live today? I'm not sure, but I know Tukey and Romeo and Love went live yesterday at 10 a.m. I know they were giving out their picks. I know we had a 50%er and 80%er. Again, I'm not an advocate of just following blindly, but I mean, Tukey's been on fire. Actually, if I had to trust someone and I was like out doing errands and I got an alert that said he was buying whatever he was buying, I would probably take a small position. It hasn't happened because I had daughter issues 2 days ago, and yesterday I was running around. But yeah, I mean, we have people that go live, 2 to 3 times a week. Romeo go live 2 to 3 times a week on his own. Tukey, which is new, one time. We're going to try and get him on YouTube, hopefully. See question about NVIDIA, Microsoft. If you were with me on Monday, I mentioned NVIDIA. I gave a NVIDIA play out. I said NVIDIA tends to top out at 180, 150 would be my first put position, and 183 would be my second put position. What happened the day, I think it was Monday, NVIDIA dropped. It spiked up past 183, and then it dropped. I haven't actually looked at NVIDIA where it is today. I'm actually just focusing on Meta, which is now doing 2.4% this morning. Love that. I love being right. I so rarely carry a position overnight. All right. I like to get in. I like to get out of a trade, which is why I have a cash account. I rarely secure a position and hold it overnight because in the past I've got burnt. I'm like, why is the market spiking pre-market? I'm in a bear position. This is bullshit. And when the market opens, my account's like, and I'm like, oh, screw. Okay, so this is great. NVIDIA, 180, 150, first entry into puts, 183, second entry. Where did NVIDIA close at? 176.74 yesterday. Low of 174. Where is it this morning? 172. So did I mention, let me see. I thought I mentioned that NVIDIA could technically go, 170 flat, right? That's what I was saying, 183 to 170. So yes, NVIDIA is sitting at, where are we this morning pre-market? Pre-market, we are at 171.89, 171.93. So basically 172. Yeah, I mean, I think 170 is definitely going to get hit. And understand, if the market continues to drop, it's not like NVIDIA will find a base and go, oh shit, we're at 170. We're okay. Whereas the market just keeps falling. Everything follows the market, and all the the major stocks push the market. So it's kind of like a give and take. Apple, Microsoft, Netflix, Tesla's been beaten up. I'll check out a Google and Amazon. But yeah, I mean, I all think they should go lower. So if you want to look at something, you can look at forward PEs, okay? Forward PEs is price over earnings. So for any stocks or positions you're looking at, when Tesla had a forward PE, and I'll use that example, I did a video. The forward PE was 72, and I said it should be something under 40 at the time. Let's check out Tesla's forward PE. Oh, 38.65. So again, Tesla's forward PE, and this is months ago. This is probably 4 months ago. Tesla was $300 and something. I mentioned their forward PE. Now, Tesla has other issues. Tesla is using market share in the US. Why? Because Tesla had like 76% market share. I think it was 2 years ago. Then they lost 4% last year. As they keep losing 4% market share each year to GM, Ford, there's just so many, Lucid, Rivian, whatever it is, they're going to continue to lose market share. So that will put downward pressure on Tesla. Where do I think Tesla's forward PE? Well, it should be just like any other big tech company, because that's technically what they are. It should be in the range of Google, Microsoft, Amazon. I don't even know if Netflix makes money. Does Netflix make money? They pay so much money for streaming. Oh, they do. They have a forward PE of 30. So again, Netflix, extremely risky. Forward PE of 30, Tesla 38. Let's just use Amazon. Amazon's solid. Why? Because in recession, out of recession, we're all buying shit on Amazon. So let's look at Amazon's forward PE, right? You would say, well, shit, it should be pretty high, right? No, they actually have a non-existent forward PE because I guess they're not making money. Their PE last quarter was 84. Okay, so 84, it's not listed for the forward PE, but understand you have Amazon. I mean, that's still overvalued. So yeah, I mean, can shit go down lower? Yeah. Let's look at Microsoft. All right, maybe Microsoft is more in line. And I'll show you the point I'm trying to make. Microsoft PE is 27. Its forward PE is 27. Here's the point I want to make. In normal times, PEs of the whole S&P, so you take every stock in the market and you look at their forward PE. On average, it's been 17 to about 23. 27 to 32 when the market was bubbling 2 years ago, 2020, everything was going up towards the end of the year. PEs of the market with 35. Well, shit, we're not that much, further. I mean, Microsoft's at 26. So yeah, in my opinion, Microsoft, if there's a bear market and no Santa rally, could technically go back to 236. We're 257. So, I mean, I get institutions are buying Microsoft. They love Microsoft. Why? Because they have to buy shit. That's just how they are. Okay, let's see what else we got here. Let's just see if we have any other good stuff. Thank you. Yeah, I know you mentioned Roblox yesterday. If I knew the markets were going to tank again, just because I have an opinion doesn't mean I'm going to be right. Just because I said the markets were going under 400 on the SPY and we would likely see 395 today, and here it is. And now I'm telling you 393 between today and tomorrow. And if we see that, we'll likely see 390, which is how I started this video. If you missed the start of the video, I would go watch the beginning because the first 10 minutes were good. With that said, I'm heading over to Discord. You can join our Discord, 7 days free. Anybody that doesn't know, and if you're new to trading and you just found me, this is my Moomoo. If you haven't seen my Moomoo video, okay, let's go this way. Okay, you put in $100 and you only have a couple days left. It only runs till December 20th, and we should have a link below taking you to Moomoo. But if you're newer to trading, if you deposit $100, you get a $10 coupon and 5 free stocks. So you put in $100, you don't even have to trade. You wait a week, 2 weeks, 3 weeks. Guess what? You got $100, 5 free stocks. Your return is $40. So you're going from $100 to $140 without trading. A free $40. So if you do not have a Moomoo account, you must open a Moomoo account. Put $100 in. Let it sit there. 3 weeks later, you'll claim your prize. Claim my coupon. Claim my free stock. Claim my free stock. You have an extra $40. So I don't care if you have 100,000 in the bank or 1,000 in the bank or 200 in the bank. If you're looking to invest and you do not have a Moomoo account, $100 is all it takes. If you somehow put in $2,000, you get 15 free stocks plus a $10 coupon. It equates to about $100 worth of value. So you put in 2,000. Actually, it's 1,000 now. It's only 1,000 now. You put in 1,000 and you'll have 1,100 2 weeks later. So that's a 10% return. Again, you don't have to trade. How can you make money without trading? You can join Moomoo. Use our link below. All right, that's it, everybody. Heading over to Discord. Please join me tomorrow morning. Oh, I forgot everybody that's still with me. This is the best news. What is tomorrow? Quad witching. Oh, yeah. Join me in the morning. We'll talk about quad witching and what to expect.